The cloud. Okay. So we have in front of us this gentleman named Michael Quillen. Michael, tell us a little bit about yourself and maybe your experience in the stock market before we met.
Yeah, so I'm an attorney. I'm a family man. I had very little experience in the stock market. I had a 401k. I probably started 5 or 6 years ago to try to save some against some taxes. And then, I had a guy that was running that for me for I don't know 4 or 5 years, and then I started looking at him like I'm getting like 4%, 5%. Like this just seems really bad. And I started talking to my brother-in-law, and he's been investing for years, has a very high risk tolerance, way higher than me. I'm very cautious. I like knowing all the possible scenarios and trying to
You
plan
you
for
are
it.
you are that.
Yeah. Yeah, I look for the worst, and I plan for the worst.
Yeah.
But so, he kind of talked me through some things and helped me out. And, my return was like 30% or something. I'm like, okay, we're way off. Like whatever he was doing, my old financial guy, he doesn't know what he's doing. But I also recognized my brother-in-law was a little bit more kind of risky. And so I was like, all right, well, I got to find something. And I stumbled across your YouTube videos and channels and, you know, thought that was really interesting. And my brother-in-law talked about options and the will, and I hadn't really heard about this in the money strategy. And so I got really curious, and that's kind of what led me down this path to where I am today.
Well, I mean, you're not an atypical investor, right? You've got some experience, but it's the experience that it's kind of like I would say that it's the Kramer experience. Jerry
Hmm.
Seinfeld wouldn't be friends with Kramer if he didn't live across the hall.
Right.
And most people, that's how they stumble into financial stuff. They have a 401k that their company sets up,
Mhm.
or they put their money into a mutual fund because their brother-in-law recommends it or whatever, and that's it. We're not educated financially. So you took at least the initiative to educate yourself financially. So I wanted to just talk to you because I really like your approach. You are ultra safe and ultra worried about your portfolio, and good, because sometimes not losing money is making money. And you always are looking for the nuances about how you could lose money. So I think since the very beginning, you've been really conservative, and you haven't really wavered from that, from what I see. So tell us about why you've been conservative. So just so everybody can get anybody who's listening to this can get a frame. The market's really gone up, okay? And you've been in the money. Now, I teach an in the money strategy primarily so people don't lose money. After a while, they can do whatever they want, but at least if you understand how you can, protect your portfolio by being in the money, that strategy, that can work. And when a market goes up, people are like, "Oh, you shouldn't be selling covered calls," right? So take us through that kind of a mentality about how that's worked for you.
Well, my one of my biggest concerns getting in was I'm like, all right, I'm gonna devote a significant chunk of capital and into something that I've not really done before. So for me, protecting that investment, that size of money is really important. And I'm willing to sacrifice a little bit of potential growth to maintain and preserve the base investment. Um, but with the in the money call system, you get the right stock in the right time and the right place in the market, and you can do that and not be risky. You're not making 8% a month, but you're making 1 to 2% a week. I mean, I think I was probably closer to 1.25% a week, and I'll take it. I was able to preserve the capital that I started with. I was able to, I would sell a call on Friday and I'd kind of watch it. I'd set my alerts on my phone and I'd kind of walk away from it. I mean, I would be curious what was kind of going on the rest of the week. But I, for the most part, didn't have to worry about what was going to happen with the stock. It was going up or down because it wasn't near my strike. And sure, I had to roll it up, and that cost some working money to roll up, but if it was fine because the stock was going up. So it was definitely a little counterintuitive, and I definitely have to break that. Even though I hadn't been investing for long or really much in my life, there's that somehow it's just drilled into our head. You buy the stock and it'll take off, and that's what you want. And there's some fear that you're not keeping up with it. And so that's probably been the hardest things to kind of get over, even though I was not a huge investor before. It was still
Yeah.
buy and it should go up. And what happens if it goes down? Oh no. But
Yeah. And you're in a little group, a side group that we have on MicroStrategy. And tell me just about some of the nuances that you're hearing in the group. Like, because anybody that's in MicroStrategy thinks MicroStrategy is going to go to 500 bazillion dollars, right?
Yeah.
I mean, we all, and I'm in MicroStrategy too, so I'm one of those guys too. But I've been hearing since I've been in MicroStrategy, frankly, about how you shouldn't sell covered calls because it's going to go up and you're going to cap your gains. But yet, MicroStrategy hasn't been near the highs. And while everybody's like, oh, it's going to go up, it's actually not gone up. And if you didn't collect the income over that period of time, you'd have left a lot of money on the table. What kind of thoughts are going on in that little side group discussion that are happening?
Yeah, they're definitely trying to figure out the balance of how can we capture the upside potential without risking losing anything. And I think the biggest problem is that a lot of that group really loves MicroStrategy, loves Bitcoin, and does see it going to the moon.
Yeah,
But they're starting, like, we're all kind of recognizing it's like, maybe it's going to take a little while to get to the moon. And so, there's still some things to look at. And I've learned a lot from that on, what happens if you were to sell at the money. So way more aggressive than an in-the-money call. And if it goes down, what's that look like? And how do you close a position? And so I've learned several different things from doing that. But I'm checking the stock movement like once or twice an hour versus once or twice, a day or every other day. Like,
yeah,
'cause my alarm's on the phone. I would just check it out of curiosity as to what was going on with the market versus if it drops too low, I got to move. So
yeah,
um, they've really been trying to figure out what works and leave some uncovered and some not because you got that greed ball. We want to catch it on the upside, but as long as you're keeping with the plan, you're okay. And if it comes down a little bit, that's okay. Um, you're not losing money because you've sold an in the money call.
yeah,
I think the biggest thing I've learned is you have to, it's definitely an art as to when to roll down and how far to roll, because if you're rolling down, you're losing, you're probably giving up a little juice that you might have made before. So there's some balance trying to figure that out, but it's much more comfortable just selling in the money than messing around at the money or out of the money and trying to guess what the stock is going to do.
yeah. I think this is the thing is that people don't realize that there's two different mentalities there. There's the old buy low, sell high mentality, where we all think we're smarter than the market. We think that we're catching it at the exact bottom and it's going to go up from here. And that's how we've all been kind of taught by the market, buy low, sell high. And then the other one is the income mentality. And the two really don't have anything to do with each other. If you want to get income, you should really try to forget about which way the stock is going and just try to sell so that you can get the optimal amount of juice wherever that is. So I think that's where the probably a lot of your discussions are lying. I want you to go back if you don't mind and just kind of think about when you started this and kind of what your mentality was about it, and maybe give a little bit of advice to people that are just starting it now. You've only been in this what, about 6 months?
Yeah, so I started the class, I think I took your elite course class probably in February, probably February, January, February, somewhere in that area.
Yeah.
And then I joined the mastermind group right after I finished that class. And I've
Okay.
been in the mastermind for probably about three and a half months now. Um,
Okay.
yeah.
I'm trying to give the people that are just coming out of the mastermind or halfway through it and may be able to see your video or part of this, just to give them that, like, if you could go back and give yourself the advice when you were 19, this is that kind of question. Like when you were like halfway through the elite, what do you know now that you could tell these people, um, they could learn from it and really benefit?
The biggest thing is, from my opinion, stay away from at the money and out of the money stuff in the very beginning.
Yeah.
Before I joined the mastermind group, I was paper trading
Right.
on MicroStrategy and trying to follow the principles in the elite course and paper trading. And I'm like, my juice journal is showing me $20,000, but I'm looking at the account, it's saying four. Like, what is going on? And I didn't understand, you know, the whipsaw, the potential when you're rolling and having to do a lot of adjustments. You have to be really careful, because that's how you lose $1, you lose $2, and that really amplifies how much you're losing. If you've got one contract, it's not as big of a deal. If you've got 10 contracts, well, gee, $1, that's $1,000. Like, that really adds up. And
That's right.
so, um, because I think there's definitely an art to rolling down, how far to roll. And so I only had to roll down a couple times over the last 3 months in Palantir because I was able to stay low enough. And one, I probably could have just let it roll, but I got maybe a little anxious. And that was one of the nice things about the masterclass. I was able to reach out to you, Mark, and you kind of helped me at a really weird time of day for me. It was the middle of the night. I think you were somewhere else, so I was able to talk with you. But you were really patient, explain things to me. But I didn't understand because I hadn't seen that before. And
Yeah.
so when everything's going good, it's easy to feel good about things. But when things are coming down, you kind of get anxious. And so when you're in the money, you got a lot more room to not have to worry about it coming down. And when it does come down, you can figure out, okay, I'm just rolling down a little bit. It's not gonna be that bad. Maybe I don't make the full amount that I was hoping to make this week, but guess what? I made, a fourth. I made 25% of what I was hoping to make this week. Okay, I haven't lost anything. And that was really kind of the mentality. Again, protect the underlying. If I don't make the full, 2,000, 5,000, whatever it is a week, but I make 500, okay, I made $500. I didn't lose anything. And that was kind of one of
Nice.
the biggest things that was helpful for me.
Okay. Um, I could talk with you for a while because really think you got a great head on your shoulders about this stuff, and now you're starting to get into synthetics and some other fun stuff. But um, would you recommend other people, invest in this course or the mastermind? Has it helped you a lot?
Absolutely.
It's a
Again,
leading question.
what's that?
That's a leading question, Your
Oh,
Honor.
sorry. There you go. I knocked out my earphone. I'm sorry. Will you please
Okay.
repeat your question?
All I said was that was a leading question.
Yeah.
Um, but yeah, you're a lawyer, so I figured you would like that joke. But
Yeah.
the
Objection.
timing,
No.
timing is everything, you know?
That means everything. Would I recommend the elite course? Absolutely. I think is very helpful for new people who are interested and really don't know where to go on how to get started because it does require a change in mentality and approach. Again, I wasn't very active in it, but in the stock market, and so it did take some time, and I still feel it sometimes when it's going up. I'm like, oh, I want to do this, and so having that experience with the elite course is really helpful. The mastermind group really helps me ask questions and understand from some people who have been doing it more and have a lot more experience. And there's some people in our group that sometimes I don't understand what they're saying, but I'm not there. And guess what? At some point, maybe I will be. And I'm not, and that's okay because the questions that I do have following very simple in the money program and selling covered calls is easy to understand, but that doesn't mean you're not gonna have questions. And so the mastermind group is really nice to be able to ask people questions, not feel dumb. And everybody's been super helpful. And it's really, people are available all the time. And they'll answer and they'll take a significant amount of time from their day to answer your questions, and I found it very helpful. So
Yeah, I've
definitely.
always found that amazing that everybody's willing to help. Like we got some guys, that really know a lot of stuff. I mean, I don't even know what they're talking about half the time. And I'm just amazed that they're always willing to kind of help everybody. And I think that's what makes a great mastermind group. And we've got a lot of cool ideas going on. I know you got another group that you're, kind of that spawned off of our group. And you're always asking me questions. You're always participating. And I think those are the people that get the most out of it is
Yeah.
everybody's helping everybody else too. So that's great.
Well, and I needed somebody that I could be around, right? Like
Yeah,
you grow based on who you're around. And
that's right.
I've got some amazing business partners, but they're not really interested in the stock market. That's okay. And my brother-in-law is great, but I also don't want to keep having to talk to him every single time I have a question. And especially because we do have a different risk tolerances. We do have slightly different strategies. And so it's nice to be in the mastermind group where I can talk with people who are doing in the money call, covered call system. And then again, there are people who are doing that on top of other stuff. And if you have questions, you could talk to them about that other stuff. And
Yeah,
that's where it's been really, really beneficial for me.
that's great. Well, thanks, Michael. I have permission to use this on the web, or I mean, not on the web, but on the websites and things like that. Cool, right?
Absolutely.
Well, thank you so much, dude. That was great. I appreciate it.
Minus me
Any final?
yanking my thing out of the ear. Sorry.
That's all right. Any other thoughts that I didn't ask? Anything I should have asked?
um, I think the only thing I would say is that sometimes I feel bad asking you questions and other people because it's always there and I always get answers and I always get answers in a very timely fashion. And maybe not answers, but feedback and letting me bounce ideas off and kind of, whether I'm talking to you or somebody else in the group, but you do a really good job of letting me kind of walk my way through the steps to understand, not just getting the answer, but understanding how we got there. And that has been, again, very beneficial, well worth the cost. Many times over. I've saved so much money from not making stupid mistakes that the investing in the mastermind course has been by far the best decision. So,
Well, thank you. I'm happy to hear that.
yeah.
You let's see. Hang on.